This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and normally on the weekend we would do a deep dive. However, this weekend I don't think I can add a great deal of value doing another deep dive, to be honest, because there's not a great deal of data. I can show you a couple of things that have changed, so I'm going to do that. We're going to do the deep dive today in just 4 tabs. If you're unfamiliar with it or you want to recap, you can always go back and watch last Saturday's weekend's deep dive video. I still think we're in a blow off top, and I know a lot of people want to call the top here and a lot of people want to say this is going to melt down, but I really don't think so. I think this is just a decline into a daily cycle low. I think that will soon bottom, and then we should resolve to new highs. Once we resolve to new highs, okay, as soon as we get a new all-time high, we'll re-encompass the low, as we always do on this channel. Same strategy as always, and once we've got the daily cycle low in, which is due no later than about the 8th of December, give or take a few days, okay, that becomes the invalidation, and the moment we were to fail something like this, the cycle, okay, by trading below it, then we can say the top callers are right. In fact, at that point, I'd be thinking I want to go mostly cash and go and enjoy my Christmas. But for all we know, and my current lean, we're about to find a daily cycle low and rally up to new all-time highs. You'll see me grab this and do this, okay, and maybe even start to set another angle steeper to the upside to catch the local high once that breaks down. So no real changes to that. I know sentiment's really washed here, but again, part of the reason I just don't think this is the top is we're down somewhere around 4% from all-time highs, having reached extreme fear for the stock market. So no changes there. I still think we're in a blow-off top. I'm still positioned long, as you'll see when we get to the positions at the end, as always. And if anything, I think this is finally another time when I can add a position, move the stops up, and be long and strong into the end of the year, maybe even Q1, because given where the cycles are, I think this is probably going to spill into next year now. I've been open to that for a long time, even though it wasn't my base case. But as always, when the market proves something to me, then I'll just adjust to the new data as it presents itself, right? I'm not the kind of dogmatic person that would just sell here because it must top before Christmas because that's what I thought, right? If it wants to run into next year, I'm not going to argue with it. We'll stay long and strong for a little while longer. Now for Bitcoin, the sentiment is even worse, isn't it? The sentiment is completely destroyed. Lots of people out here calling tops. We're going to go through some bullish and some bearish charts a little later on in the presentation, but as it pertains to the weekend's deep dive, we're right there, okay? Now, yes, it went lower than I was expecting it to. Yes, a lot of people want to call the top here, or for some reason want me to call the top here, but as always, I'm going to continue to trade the cycles, because if that really is a weekly cycle low, we should get a big swing this week, and we should at least get a 20 to 30% rally out of this to the upside to let us out a little bit higher up in the worst case scenario. And in the best case scenario, it should go to new highs. Okay, now, I know a lot of people are capitulating on the idea that it could make new highs. I'm just going to say I have no idea, right? I have no idea if it's got new highs left in it or not. I really think it could go either way, but it's just not my style to sell into a weekly cycle low, okay? We've made it all the way here. Should be time to get a turn, okay? That's how I'm seeing this, and that's how I've been seeing it. So no changes there either. We also got a little bit of mixed employment data, non-farm payroll data above expectations and looking stronger than expected. And we got the unemployment rate tick up to 4.4%, okay? Where is it? Here, 4.4. The issue I have with this, okay, is I could still jump up and down and say, look, looks like a lead-in before acceleration, synonymous with recessionary periods. But the issue here is, okay, this is September's data. This is 3 months old, okay? So it's still moving in the right direction for the weekend's deep dive. It's still moving in the direction of recessionary data. And I still smell a rat because they just so happen to lose the data right before we're probably about to get this big spike, okay? But again, hard to really say anything more than that because we haven't got any data to work with. And even if we had the data, it'd probably be fake anyway, right? So, you know, I could have jumped up and down and say I smell a rat for 20 minutes, but I think we'll do that next week instead. The October CPI report is cancelled. They're just not going to release it at all. So again, I smell a rat. And again, you probably already know that. And again, you know, it is what it is. What do we do in this situation? So that concludes the weekend's deep dive. Like I said, we'll come back and review it in full detail next week. And hopefully next weekend, we should have a confirmed swing low on the Bitcoin chart. We should be moving up. We should be seeing sentiment doubting that rally on the way up as well. We should be seeing probably the stock market have bottomed or be very close to a turn if not, and probably have added a couple of positions since then as well. Moving on with today's episode, the first thing we got to point out is the rate cuts are moving in the direction that we expected them to, okay? So happy days there. Again, tell that to the bond market, and given everything that's going on, I think we're still very much on top of the macro, okay? That's what this is saying to me. This is confirming things are still going according to plan under the hood. And so today, I wanted to talk a lot about this, okay? Risk is higher than ever this cycle. That's absolutely true. But I still think this dip is going to get bought up. Rate cuts and easing is going to become the mainstream idea. I still think we're going to get people looking at the upcoming rate cuts and saying this is bullish, this is easing conditions. I think you're going to look at things like QT ending in December, and people are going to be kind of spinning that in a hyperbolic fashion, right? They're going to be like, this is QE, the printer's back on. I'm already seeing people talking about Japan printing, and that's going to spread to the rest of the world. And, you know, QE is coming, printer is coming, printer go burr. It all sounds very fun and exciting. I get it, right? But really, I don't think any of that's true at all. I don't think we're getting anywhere close to true outright QE and Fed balance sheet expansion until late next year, okay? But it doesn't matter. What matters is I want the majority of market participants to buy into this narrative and accept this narrative so they can get all in on the markets, okay? And that's where I think we'll see the top. So what I want for us to do on this channel is to take a step back, not get suckered in to any of this rate cuts are bullish and easing is coming and printer is coming narrative. And instead, I want people to observe everyone else fall into that trap, okay? That's what I am suggesting we do from here. And at the same time, we will seemingly swerve all of the risks out here as this dip gets brought up, okay? So all the people calling for, I don't know, yen carry trade unwind or trouble in some other place or some war about to kick off or whatever the narrative is, right? The AI bubble pop, there's loads of them to choose from. But I think what's going to happen is we're going to swerve all of those risks. And then the market is going to go, oh, okay, like this is a indestructible market conditions. We're now going to start flooding the system with liquidity and everyone's going to get super, super bullish, right? All of these top callers are going to be forced to capitulate because the markets are going to continue to rip. And then they're going to have to accept that it was the, quote, liquidity or the easing conditions that is driving this market now. And those conditions and that liquidity is only going to increase as we spill into next year. And finally, that's when I think we rug them all, right? Then finally, the recession comes home to roost. We'll be able to point back at the inflation data that was already crashing, okay? And that's why they didn't release it. And the jobs data that they also seem to lose or refuse to release, all of that's going to be recessionary. And finally, everything will come home to roost, but only after we've convinced every man and his dog to be all in on the liquidity narrative and all in on risk assets. And the first tell here will be getting the first left translated weekly cycles, which, by the way, we don't have for either Bitcoin nor stocks at the moment. And both are soon to bottom for their weekly cycle lows. Left translation in the weekly cycle out of those lows confirms my ideas. So notice here, okay, from the weekly cycle low, right translation, left translation, big long consolidation, okay? But then we go right translation here, okay? Really, we should shove this red box back here because that's where the high is. So a heavily right translated cycle and then a big spill, okay? Remember, the longer the cycle goes, the faster it spills to the downside. And now if we're to set up a left translated cycle out of here, left translated weekly cycle, that is, okay? So measuring between the two blue arrows, we draw a line through the middle. And if the peak comes to the left-hand side of that halfway point, we call it left translation. Okay, if that happens here, then that is bearish implications. We're going to spend longer declining into the next weekly cycle low, and then we'd expect left translation and failure to give us the 4-year cycle low, okay? Do you see how the setup is there? There's a subtle tells here that because we just done nothing but right translation, we're setting up for that left translation here, failure, left translation, failure. And at the same time, look at the stocks, okay? Since the 4-year cycle low, right translation, right translation, right translation, right translation, same again. Then we got this left translation and a spill, okay, big nasty spill. And since then, right translation, okay? So again, if this thing can set up a big final push, left translation, and then fail, that would be a big tell here that we should be able to reset the larger order degree cycle, right? Because remember, in a bullish cycle, we go right typically, then another right, and then a left to complete it. And if we're entering a bearish cycle, then the first one would right translate, wouldn't it? And then the second one would left translate and fail, left translate and fail, left translate and fail. Right out of the cycle PDF. And of course, you can find a bunch of cycle information and educational content on the Camel Finance website as well. So this is just pretty textbook stuff, okay? So if this is going to be a bearish cycle, we just completed the right trans, okay? So then it should be left trans, fail, maybe even one after that to bottom, okay? And then we turn up. That would be perfect from a cycle perspective, wouldn't it? As opposed to what we've been doing the whole way up, which is chaining together right translated cycles before left translating to complete that one, okay? Now, of course, we could see right translation out of here, and then this idea is kind of broken, and there's no hint from the market that things are about to melt down. But remember, if we did get a blow off top on that liquidity narrative, suckering every man and his dog in here, making all the bears and the macro doom callers capitulate, then we get the left translation and fail. Okay, that would just be cycles doing cycle things, and the tell would be there for the cycle traders the entire time, exactly the same as what I just showed you with the Bitcoin chart, right? Bunch of right translated cycles, get the left one, here, and then that sets up the left and fail again into the 4-year cycle low. So I think this is possibly how we harm the most amount of market participants, okay? And again, if you really think about it, we have been talking about this for a long, long time, just not in a massively zoomed out perspective like that, okay? Because we've been talking about left translation in the weekly cycle here for Bitcoin, either to new highs or to a lower high. Now, at the moment, I can see a lot of people whose base case is it's the red squiggle. I know we went down a little bit lower than I was anticipating here, okay? But either way, we've still either got the red squiggle just from lower down or this yellow squiggle just from lower down, okay? We don't really know yet. And I know it feels like the yellow is impossible. I know that. But by all means, you know, go max short, choose the red squiggle, you do you, right? This is not for me to convince anyone of anything. I'm just presenting the two cases that could possibly resolve out of this weekly cycle low. But if my sneaky suspicions are right, and if what we're going to see here is the liquidity is coming, easing is coming, and everyone's going to go all in as we have this big blow off top and left translation in the weekly cycles, if that is right, then you know what the sentiment's going to be like out of these cycle lows, don't you? Right? It's going to be, this is a sucker's rally. And you better sell soon before it rolls over again, right? This rally will fail like the rest of them. And then very quickly, as the market relentlessly bids up, because that's what left translation does, right? It covers a lot of ground very quickly. We're going to see, hey, Camel, when's the next cycle low, right? Camel, will you let us know when the next dip is? What's the narrative for this pump, right? There's no reason for Bitcoin to be pumping like this. And then, it's pure manipulation. What a scam industry, right? Because it's the same every single time. The sentiment's always really bad early on, and then people pile in before realizing they've made the mistake simply because they don't have the awareness of cycles. And if you think I'm too bullish, well, take a look at what Gert here is predicting. Gert thinks that we've got this measured move target from here that completes at 340K, okay? So don't be telling me I'm too bullish here, okay? Because there are certainly people more bullish than me. And his idea for XRP, because I know a lot of you guys like XRP, is that it will do something similar. And so at the same time as you've got people like me looking for the left translation in the weekly cycle, and people like Gert looking for an absolute moon mission, an unprecedented move, frankly, there's even more confusion out there because you've got people like Rao saying that this is absolutely unexpected, the amount of volatility, although at the same time, he says it's no different to a bunch of other times we've seen volatility, and this too soon shall pass. Rao has been one of the biggest proponents out there for extended or slightly lengthened cycles, a 5-year cycle, ISM, right, running into next year. We get to find out soon enough, right? This year is rapidly coming to a close. A lot of people think now all of a sudden that the 4-year cycle top is in. That could absolutely be the case as per the red squiggle. That could absolutely remain the high. Or maybe there's one final higher high left, and again, maybe that is the path of Max Payne here. We're going to find out soon enough. Bob Lucas thinks that was the top, okay, and that we're going to have to use a 2-month rally that's coming soon out of this weekly cycle low to let everyone out. Again, that would speak to the red squiggle playing out there. But I wanted to show you this because somebody tagged me in this and brought this to my attention recently. Note the date, April 9th, right there at the bottom for Bitcoin at the prior weekly cycle low. I said in 2020, Bitcoin crashed to around 3K and everyone said it was dead. Everyone said it had failed and it was broken and it would never surpass its prior highs. All it did was form a weekly cycle low and went on an almost 20x run to the top. And right here, when I say right here, of course, that was at the lows of the last weekly cycle. Lots of people think it's topped. Lots are saying the cycle's changed or broken and it could never make a new high again. But we're just forming another weekly cycle low that paves the way for a final run to new highs. Okay, and that's exactly what we did. Out of that, we ran 70% and put in a new higher high with, here's the key subtle detail, okay, a right translated weekly cycle. And so, are you actually prepared for much higher prices, right? We can just copy and paste this right here to this current weekly cycle, you know? Is this time different? Well, it can always be different, okay? We could always get just a lackluster bounce here and a rollover, as we've been saying, in line with the red squiggle. But I still think it's malpractice here to totally discount the idea that the market couldn't get all in, all excited about the end of QT and liquidity coming to the market and a lengthened cycle and whatever else, just to give us a few weeks of squeeze, okay? Don't discount it, is all I'm saying. The average of these weekly cycles has been about 94 or 95%. So if we were to go 94 or 95% from here, that still puts us somewhere in the neighborhood of 150K. And ask yourself this, how many people legitimately believe that's on the table from here? Almost none, okay? Including me, to be honest. I'm actually kind of leaning on the idea that we're going to get that red squiggle play out at this moment in time, right? At least I'm open to both. It's also worth pointing out that right here, we are massively oversold for Bitcoin. We've got the highest long to short ratio that we've had all year. The last time we were at these kind of levels was indeed the lows before that weekly cycle bottomed in April, and then it ran up to 120 something K, whatever the number is, right? And now we're even higher than that. Again, synonymous with major lows forming. Also, the realized loss levels have surged to levels last seen during the FTX collapse, okay? So take a look at this, the hard right edge, okay? Massive spikes, not seen since the bear market lows. And again, notice where all the other spikes are, at the weekly cycle lows. We also got the highest volume ever on IBIT on the ETF, okay? Look at this. So massive volume here, synonymous with finding major swing lows. And a rally just 10% higher from here to 95k means we'll liquidate over $5 billion in shorts, okay, fueling further upside. And we may even see something like this, right? A 5-wave impulse up to around that 150k level. Again, more confluence there. And it would probably send this Bitcoin dominance even higher to complete its 5th wave. And you know, you've got to keep in mind that unless this here, okay, is 1 into 2, which will resolve to a lower high, okay, then the numbers here could actually be a lot higher than most people are thinking. It's just most people don't believe it could happen anymore, right? And whilst every man and his dog of late has been quick to pull up moving averages and all this kind of thing, like any trade setup or any piece of TA, you can get false signals. And Google showed us one here, right? Standard breakdown, spill to the downside, turbo reverse to new highs, right? Look at Bitcoin right now. Also notice the MACD, very similar setup. Could this get that spill, right? Driven by liquidity and narratives, and rate cuts are coming and QEs come in and print to go burr. Because remember, most people that look at that stuff have absolutely no idea what they're looking at. You know, I see things all the time where there's like moving of some money from a TGA or a RRP account, like one way or the other, right? And people make these enormously bold sweeping statements like the Fed just turned the printers back on, you know? And it's like, they don't even know what they're looking at. I saw one recently from Bar Chart, like the biggest tape slave in the game, who was like, liquidity is coming. And he posted something that was liquidity negative for the market, right? That's how little people understand liquidity moving. And so I think it's super, super, super possible here that we could actually see the majority of the market start to think the printers are coming full burr. Everyone gets fully exposed, especially if we cross into January next year, right? If we cross into January of next year, having printed some new highs or looking like we could be about to challenge the highs, every man and his dog will be like, the 4-year cycle's dead. I told you, right? Like, I think we could easily set people up here for one of the most violent rug pulls ever. Here, they didn't believe in the 4-year cycle. Here, it was no more 4-year cycles going up only forever, right? Here, they panic sold the lows. Okay, and now they're really toxic and spiteful about it, and there's been no alt season, right? And there's probably not going to be one here, right? This is a scam industry. It's the worst bull market ever. If we rip their heads off now, get into January here, they're going to be like, okay, fine. That's why. It's a brand new cycle. The 4-year cycle really was dead. I am right. Let's get all in. Let's get fully exposed. Let's buy all the altcoins. And then it just does this. Left translates in the weekly cycle, left translates in the weekly cycle, perfect 4-year cycle low. Only the people that actually know how to measure the lows get away with this trade. Like, I don't know, it just feels a bit like the Max Payne trade here. And I think even in the worst case scenarios, I've been saying over and over again, we'll get the lower high, okay? So anyway, let's see if we're right about that. At the same time, look at this for the put volume on the S&P 500. Getting ready for a major turn here. Again, there's a lot of people out there at the moment saying things like, oh, I'm calling the top and this is going to be a big liquidation cascade and deleveraging and there's something's going to blow up here or there or whatever the narrative is. But they don't realize they're on the wrong side of the crowd. Right, the herd is revenge short in this market. The herd is trying to call a macro top here and the end of the world. And they don't realize they're doing it into a weekly cycle low with massive amounts of traders making the same bet at the same time. We've seen capitulatory-like volume this week, characteristic of bottom-forming prices. Right as every man and his dog wants to short this market into oblivion, you know? I think the opportunity here is for those that can kind of step back and say, I'm going to add some positions, I'm going to manage the risk, and I'm going to let these things play out into the end of the year and be open to possibly push them into January. So, as promised, we'll take a look at some live positions at the end, right? I think we're close to a daily cycle low here. It looks like it's getting ready to bottom slightly earlier than anticipated, and that's because the last cycle was longer, so we may well harmonize the two. So this cycle overran 49, which makes me wonder if we're going to get a bottom any day now to harmonize the two and give that average of 80 days for 2 cycles a bit more weight. Certainly looks like it's getting ready to turn here, okay, and given all the contrarian data I showed you earlier, then I wouldn't be surprised if we get a swing here and a reversal. And of course, if we do, we'll see a trend line break, probably through both actually, and that will confirm we got a new cycle and a turn in place, okay, and then we can add another position here where no one really wants to and everyone wants to call the top. So that's kind of what I'm thinking is coming for the Camel Crew over the coming few sessions. Gold and silver are still holding up relatively well, aren't they? Although they do look like they're getting ready to turn down. So we'll have to keep an eye on that. We've already kind of slayed this market anyway, so I'm not really too concerned what happens here. Still got a bunch of these like ETF positions as well, but again, they're not looking super convincing and compelling, are they? So we'll see what happens. And Bitcoin, as we know, okay, it's still the red or the yellow squiggle. You can see it's clearly come lower than my yellow squiggle was anticipating, but is it really off the cards to say something something like this could happen from here. I don't think it is, personally. I really don't think it is. By all means, reject this information and follow someone else if you want to. That's absolutely fine with me as well. But I just think we're going to get something akin to this. And in the worst case scenario, that red squiggle will play out something like this. Okay. Meanwhile, the chart of truth is continuing to push to the downside. Okay. So expect this to continue to put the rate cuts on the table, as we've been saying all week. And the Dixie can't quite get above this major $100 level. Is the spill coming? Does that catalyze the final blow off top moment? Perhaps. And would that, of course, fit with the idea that we've got easing conditions and printer go burr and all that other stuff retail we're going to latch onto and get completely wrong? Would it fit the idea that the printer is going to come back in full force overnight with rates at 4% and all that kind of thing? You know, so I think the subtle tells are there. I just think we've got to continue to take it one day at a time and be open to everything, continue to stick to the system and not allow the narrative and the sour grapes out there to harsh our mellow. So I'm your boy Camel. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us stormies on a bumpy